Hello and welcome to myfinanceteacher.org. In this video I want to have a look at this particular miner, which is AngloGold Ashanti. And what we're going to do in this video is we're going to have a longer term valuation of the company in terms of its reserves and resources in the ground, taking into account the production costs of those reserves, as well as the debts that the company has, the number of shares outstanding, and all of that is going to give us an estimated value per share. But this estimated value per share is more or less, I would say, longer term, some sort of an intrinsic value. In the shorter term, the share price can fluctuate quite substantially and stay far away from the estimated value. Before we jump in, please note that if you're watching this on YouTube, this video is going to be significantly outdated. You might have missed a chance to pick up some shares of a miner before they rally into the continuation of the ongoing intermediate cycle in gold. So if you want to have timely updates on a range of assets, including cryptocurrencies, precious metals, energy, general stock market, and the regular newsletter from my business partner with decades of investing experience, join the members at myfinanceteacher.org. We regularly look at particular interesting miners, and after a short while we'll build up a knowledge database, so to speak, which we can use to decide whether ongoing market price for a particular miner indicates some sort of a over or under valuation. For this particular video, we're going to look at three scenarios. And even in our balanced scenario, the price of gold that I'm going to use is around 2% below the current market price. For a balanced scenario, we're looking at the price of gold of around 1663. The conservative scenario is 10% below that, just under 1500. And the optimistic scenario is 10% above the balanced level. That's at about 1830. These price levels mean that even if gold price does in the longer term reduce towards 1500 and stay around an average price of 1500 for a while, the value of the reserves that AngloGold Ashanti has after its production costs and its debts would give us an estimated share price that we're going to mention in our conservative scenario in a minute. Same thing for balanced and optimistic scenario. If you do expect gold prices to rise in future to at least an average price of 1830, this video shows you what would be the net value of those reserves in the ground after production costs and debts. So let's have a look at those reserves and production costs. AngloGold Ashanti, based on their annual report at the end of 2019 and a more recent presentation in early 2020, state that they have proven and probable reserves of 43.9 million ounces. The quarterly report for the first quarter of 2020 is not out yet. Once it's out, I'm going to update you on what's happening to that company. In addition to proven and probable reserves, the company also has measured and indicated reserves of gold of 80 million ounces. For our conservative and balanced scenario, we're not even including any of these measured and indicated reserves. So even in the balanced scenario, we're trying to stay a little bit more conservative, assuming there are no measured and indicated reserves, which means we are really trying to avoid purchasing an overvalued stock. Only in our optimistic scenario, we are going to include half of measured and indicated resources, that half being 40 million ounces. And of course, it's costly to dig those reserves out of the ground. All-in sustaining costs at the end of 2019, early 2020 for AngloGold Ashanti were $998 per ounce. The company actually has quite a large long-term debt, and that is a little bit concerning. Its long-term debt is $1.3 billion. Number of shares outstanding is just over 416 million shares, with no shares held by insiders. In my valuation model, I look at insider shares since insiders are usually stronger hands, which supports share prices to some degree. Besides production costs, it will also take time to dig those reserves out of the ground, and time has value. So we're going to discount the value of those reserves, and the discount rate I'm going to use is only 2%. I think it's appropriate for hard assets such as gold. Remember, this is not a fiat-based asset that we're discounting, so a relatively low discount rate of 2% is appropriate. If we were discounting some future fiat cash flows, you'd probably want to use a significantly higher discount rate. So taking all of that into account, in our conservative scenario, we have a gold price of just under 1,500. We look at only proven and probable reserves of 43.9 million ounces, all-in sustaining costs of 998, long-term debt of 1.3 billion, reserves in years of nearly 13.4 years, number of shares outstanding and insider shares. All of that gives me an estimated share price of over $43, which is astonishingly higher even in a conservative scenario compared to the current market price of $25.19. Usually when the current market price is below the estimated share price in the conservative scenario, that means that this company, this stock, is likely undervalued. And with a sizable drop in share price on Monday, once the US markets open on Tuesday, I might actually pick up some of the shares of this company. And of course, I will keep you posted about that at myfinancesteacher.org, where I try to remember to post all of my personal trades immediately. Next, for a balanced scenario, we use the same information except for the gold price. We change the gold price to 1663. That, of course, changes the value of the reserves in the ground. Everything else stays the same. And all of that gives me an estimated share price of $58.35. Again, surprisingly higher compared to the current market price. And next, moving into the optimistic scenario. For this scenario, we assume that the gold price averages somewhere around 1830 over the next several years. And we also assume that half of the measured and indicated resources of gold in the ground are actually extracted. That half is 40 million ounces. The rest of the information is the same, and all of that gives us an amazing $127.87, which is many multiples of the current market price. Comparing this to previous valuations of major gold producers, usually market price is somewhere between the conservative and balanced scenario. So again, if a large debt position doesn't actually create much troubles for AngloGold Ashanti, then there could be nice potential for considerably higher share price over the next few years. Next, let's have a look at the chart of AngloGold Ashanti, which is in blue here, versus gold price, which is in purple here. Over the last year, since May or June 2019, gold price gained about 32%, whereas AngloGold Ashanti gained over 113%. So there is some leverage to gold price, which is quite normal for gold miners, meaning that if you buy near a trough, if you buy near a low price for gold, as gold increases, your gains with the company are going to be multiplied. However, if you time your purchase incorrectly and gold drops after that purchase, the stock price of AngloGold Ashanti is going to drop by multiples of whatever gold drops by. And looking at some more details of the daily chart, a few weeks ago, AngloGold Ashanti poked through the upper range of the Bollinger Bands a couple of times, and it's currently stretched a little bit far above this 200-day moving average. So I think over the next few days, AngloGold Ashanti will probably cool off and let this 14-day RSI come down a little bit towards the middle, and in another few days, maybe 1 or 2 weeks, as gold moves into the second daily cycle. For that, see our recent video on gold. I think there is a nice potential for this company to go past $28 over the next several weeks. However, remember, nobody knows the future. This is only my opinion based on what I see on the chart for the company as well as gold price itself. So for more details as we follow gold as well as some of the major miners, follow us at myfinancesteacher.org. For now, I wish you a nice day and good luck in your trades.